Once again, the US is going to feel the consequence of oil price fluctuation and volatility in their inflation. Alastair McCaig, Fern Wealth Management. Federal Reserve Chair Janet Yellen will be starting off this week by participating in a discussion held by the University of Michigan. Audience questions on monetary policy stance are expected. So, Alastair, after the release of the Fed meeting minutes last week, what can be expected from Yellen?
I think Monday's discussions will be particularly well watched by the market, specifically due to last week's FOMC minutes, which painted a bit more of a dovish image coming out specifically from Fed Chair Janet Yellen. As is always the case when these FOMC board members are participating in sessions which involve questions and answers, there is the opportunity for the markets to delve a little bit more deeply into their mindset, and every once in a while there is just a little more of a nugget of information and understanding of exactly how it is they're thinking and looking as far as the year ahead is concerned. At this point in time, it's worth noting markets are still factoring in 2 further rate rises over the course of 2017, but those conversations we had heard at the beginning of the year speculatively suggesting there may even be an opportunity for a third seem to have somewhat tailed off over the course of last week.
Tuesday and Wednesday of this week brings UK inflation rate and UK unemployment figures. After March unemployment rate disappointed, are markets factoring in further slower figures?
I guess the big difference between the last set of unemployment data figures and this time round is the fact that the UK has officially now triggered Brexit and Article 50. On a day-to-day basis, probably not too much has changed other than a little bit more of a risk-on mentality as far as the investment community and, more importantly, the corporate community is concerned. So they may well see unemployment figures for the UK struggle a little bit. Also worth noting, 4.5% in historical terms is about as low as the unemployment rate in the UK tends to get. As far as the inflation figures are concerned, we have seen a number of different economic regions just begin to see inflation figures tail off a little bit, and a large part of the reasoning behind that undoubtedly will fall at the feet of the volatility we're seeing in the oil prices. Once again, the actions of the U.S. military in missile attacks on Syria saw oil prices spike higher. But prior to that, at the beginning of last week, we'd seen a real softening image of oil prices for some time. Questions over supply, undoubtedly the reason for driving the oil prices higher, but that does play a direct consequence as far as inflation data is figured. Much of this possibly has happened too quickly to be fully correlated into the UK inflation report, but I think the investment community will undoubtedly have that at the back of their minds when they look at the data releases on Wednesday.
Last Friday, the US economy added the least amount of jobs in 10 months. So how crucial will US inflation release on Friday the 14th be for driving dollar optimism and painting a positive picture for the US economy?
Well, once again, the U.S. is going to feel the consequences of oil price fluctuation and volatility in their inflation figures as well. It will go some way to helping drive the overall unemployment data. Again, in the last 2 decades, the U.S. has seen the lows tending to be in between that sort of 4 and 4.5% range. Only in the heydays of the sort of tech boom were the unemployment rates in the U.S. down to about 4%. I think it's worth remembering as well when it comes to the unemployment levels in the U.S., a lot of this is arguably going to be driven around mindset and expectations over the Trump presidency and what will materialize there as far as confidence is concerned from the business community. I think it's worth remembering that only last week we saw issues being raised as to exactly how quickly we might see some of these tax reforms come to the table. It's worth noting that Paul Ryan, who is the Speaker of the U.S. House of Representatives, said that the White House hasn't nailed it down yet, and he was talking specifically in reference to Trump's tax issues. also stating there were a number of other issues before they could fully focus on tax that they would need to get sorted out. So I think that'll play its part in the unemployment figure, arguably just as much as the inflation data out.
Finally, Alastair, is there anything else that you would advise our viewers to keep an eye out for?
Well, it's worth noting it's a short week, certainly as far as Europe is concerned, and almost all of the European equity markets are shut on Friday and on Monday as well. So a nice long Easter weekend, not necessarily the same in the US. But more specifically, as far as corporate data is concerned, we are seeing the beginning of the US reporting season kicking off again. And Thursday really does see that escalate with the US banking sector coming into focus pretty sharply. We've got Wells Fargo, JP Morgan, and Citigroup all coming out with data, which will give us an idea, all of which dependent as well, once again, back on inflation, which does play a large part. And as far as their profit margins are concerned, inflation and base rates, two leading drivers as far as their profit margins are concerned. Also worth noting, food retailers, specifically European food retailers, Tesco, UK-based food retailer, and Carrefour, the French-quoted one, two largest European food retailers. They too are both coming out with data. Again, profit margins for the food retailers, along with other retailers, very dependent on inflation rates. And it'll be interesting to see how easily they've been managing to absorb the complexities of the volatile inflation rate.
Well, thank you for your insights. The TV team here at Dukascopy will be updating you with more market moves throughout the week, so click back.